Hey, everybody, and welcome to broker lending versus real lending. So I wanted to make this particular video because there's been a lot of confusion in the marketplace on, hey, Chris, why is this lending company out here advertising no dealer fees? It sounds like it's like the best thing in the world. I'm going to pay them a whole bunch of money because they offer no dealer fee and they say that they're a home improvement lender and blah, blah, blah. I mean, they're everywhere. They're all over social media. They're now targeting the fence community because the fence community doesn't know the difference between broker lending and real lending. So that's what I'm going to talk about today. I'm not going to bash them, but I'm not going to hold back. I think that everybody needs to be educated. I also think that if you follow, and I'll put the PDF somewhere attached to this, however you're watching this medium right now, maybe a link, maybe a Google link to like a whole bunch of questions you should ask a lender before you even enroll to see if they're the right lender for you. But we first need to discuss what broker lending is, what it isn't, and what real lending is in the home improvement space and how it can help you. So first and foremost, let's dig into, there we go, what real lending is. So here's what real lending is. Real lending in the home improvement space is either going to be an unsecured retail installment contract, or it's going to be a secured loan of some type. Now, a retail installment contract will be given to you from a real lender where, let's just give you the synopsis so it makes sense. You're a contractor and you're at the point of sale and you're offering real lending through closed loop funding through a lender like ours, and you take the application and the consumer gets the pre-approval soft credit pull, hopefully if you're using the right lender like ours is over at Improvifi. And then they choose the program and they click the button and it's a 9.99 20-year, and they love that term and they love the rate and they're happy and they click the button and then the loan is solidified. And then when the loan finally funds out to the contractor via ACH, right, directly to your bank account, that turns into a truth in lending that is signed, and that is now a retail installment loan. It's a simple interest. It's a real loan that's paid over a period of time. The interest rate is locked in. It's fixed. There's no prepayment penalty. And the consumer makes the payments back to the lender. And then when the loan is paid off, just like an auto loan or a mortgage, it's gone. And it's unsecured. So it's attached to the human being, me, not the home, when you're talking about unsecured lending. There's no prepayment penalty. It's paid back to the lender and it's gone. That's a retail installment contract. It's not a revolver. It's not a credit card. It's a real home improvement loan. Okay, that's unsecured. Now let's talk about secured. Let's say you're using the Improvifi secured lending solution at the point of sale in this synopsis. It's a $50,000 pool project, and you show up and the consumer uses our secured lending solution and they do a soft credit pull and they get approved and they find out that the secured loan works and they sign the docs and they close the fund. Now that is a secured loan. That's going to be secured upon the home. The home is going to be used as collateral, and it's typically driven by credit score, ability to repay, the debt to income, and it could be tied to some type of a loan to value or a combined loan to value, it's LTV and a CLTV. And we train everybody on this in our training platform over at Improvifi. We have a program university, a go-to-market training session that actually trains contractors on everything that I'm talking about. But really, today, I just want to define what real lending is. And then we're going to go talk about broker lending and why that might not be best for you to utilize in your contracting business at the point of sale. So when you see these ads that pop up all over social media, you go, oh, no. I'm not using that. And boy, I'll tell you what, if you go into any of the social media groups and you type in their experience that they've had with these people, you'll also see why that's not real home improvement lending. All right, good. So we talked about unsecured. We talked about secured. It's a retail installment contract. Closed loop funding. What does closed loop funding mean, Chris? Well, in the unsecured world, when your customer gets an approval, Customer's here, you're here, your loan is here. It's tied to you, and that loan can't be taken to your competitor. That's what closed loop is. Project, consumer, contractor, lender, all tied up in a nice, beautiful circle. So that money comes to you. In a secured situation, it is a home improvement loan, a retail installment contractor, 203K, HELOC, home improvement equity loan. Like there's different loans that you can get on the secured side. That is not going to be closed loop, but it is real lending. What you want to do in that situation is make sure you securitize the contract, maybe get a little bit of money down, secure them to the contract, and then be the contractor of choice when they do get the funds. Now, in our training session, we discussed the differences on why you would use unsecured and why you would use secured in whatever particular situation. So to that point, sometimes folks will use a secured loan in a situation where they have multiple trades coming in over multiple periods of time. They're getting the roof done. They're doing impact windows. They're doing a pergola. They're getting new coping on the deck, right? Those are multiple trades, and the roofer wants to get paid when the roof is done. And then the flooring guy wants to get paid when the flooring is done. And the impact windows come in and they want to get paid a deposit and draws because that process could take longer. So that's why somebody would possibly use a secured loan. So some of the differences. And in my training, we break this down so you're highly educated on it. So when you're in front of the consumer, you can find out if unsecured is going to be best or secured is going to be best. Okay. ACH. In the unsecured world, the lender will pay you directly to your bank account, your ACH, which gives you, see my bottom point there, control. Another big benefit of real lending is the ability to have control at the point of sale. And we teach you and train you how to do this as well in the sales part of our training. What is a promo and what is long-term? Promo is a promotional loan. It's an offer, like, I don't know, Ashley Furniture. Buy your furniture now and don't have any payments for 5 or 6 years. Or you go into Best Buy and buy an Apple computer, if you even sell it, if Best Buy is even business nowadays, 36 months of deferred interest. That's a promotional loan. That's a real loan. It's tied into unsecured lending. 3 months deferred interest. Like we have a 90-day, I call it the 90-day vacation where your customer can defer the payments right after the project is completed. And then they can actually roll it into a 12-month same as cash or an 18-month same as cash. Those are a couple promos that we love. Now, some customers don't want to pay interest. So no interest, 18 months, minimum monthly payment. Then long-term, short-term, mid-term, long-term. That can go from like a 2-year fixed to a 20-year loan term. They choose, there's no prepayment penalty. And people that typically lean in on the long-term loans just want a low monthly payment option on the unsecured side, and they pay it back over a period of time. And then they pay the loan off whenever they want. They win the lottery, they get a bonus, they get a tax check, they sell their house and use the proceeds. So that's kind of the difference between promotional loan, and a long-term, short-term, mid-term. Make sure whatever lender you're working with that you've got great options. That way you can, better fit the financing solution to whomever your customer is. Rates and terms. Well, on the unsecured side, rates can start in the 7% and go up to, well, I've seen them about 15 or 16%, sometimes 18 if the customer has super subprime credit. Terms, typically 2 years to 20 years. That's what we offer here at Improvifi for the unsecured. On the secured side, I'll go up to 30 years with no prepay as well. So make sure that the lender that you use has great rates and great terms. Of course, if it's risk-based price, your customers that have the best credit scores will get the best rates. And sometimes folks that have challenge credit, like a 600 super subprime, they may pay more because they're a higher risk. So again, when we talk about what broker lending is, your 750 FICO customer, which is really great credit, by the way, should never be staring down the barrel of a 19.99 to 38% interest rate like they're putting in front of you. It's unreal. I've seen it. People sent me the screenshots. I've seen the approvals. It makes my head spin. Now, understand that if you're using this broker lending out there and you put a customer that's got a 700 FICO, 750 FICO, and they're getting a 38% approval interest rate on a 2-year or 5-year term, you're the one that gave it to them. It's only going to poorly reflect upon you. So be careful with that. That's why we prefer real lending over it. Really good rates, really good terms. Your approvals. You should have high approval rates with real lending. Your approval rates over on the other side with that broker stuff, you don't know because they're sending it off to 7 or 8 different personal loan entities. And then they get those, it's just insane. When we get to the next slide, it'll make more sense. But you should have good approval rates, especially if your customers are in the 8s or in the 7s and the high 6s, even down to 600, you're still going to get approvals. They're just not going to get $150,000 of unsecured funds. My secured loans, I can help folks with a 640 FICO. Control. I do an entire training on this over at Improvifi Training Center on how offering financing can give you more control at the point of sale. And not control in a negative way, control in a positive way. How you can control the sale as a sales professional to help bring that affordable payment solution to the table to help them close the deal. Not control in a bad way, it's control in a good way. And that goes both for unsecured and secured loans. So we teach you and train you how to do that. All right. Broker lending. We've seen the ads. Matter of fact, on Google, they will utilize, don't get loans from X, get loans from Y because we offer no dealer fee. That's their big trick on Google. When you type in home improvement lending on Google, and maybe you're looking at a specific lender, they've learned how to position themselves in the first box because they're simply using that lender named in there, and then they're touting no dealer fees. Pretty slick until you use it. They have a 97% churn rate. People pay them the money on a $2 to $5 grand. They stay with them for a year and then they leave them. They never go back. It's just awful. It just makes you look bad. So what these are personal loans. These guys are saying, hey, we're a home improvement lender and we've got no dealer fees and we've got a soft credit pool technology and we're going to throw this thing on your website. Oh God, it's awful. Looks good. And the salespeople are unbelievable. They will badger you until you buy. So they'll give you these tools. It's all leading to the same puddle of mud at the end of the day. They are personal loans. You know those things that you get in the mail? Congratulations, you're approved for $37,000. You don't even know me. You might know my FICO. You might have pulled some data that says I'm paying all my bills, but you don't know me. Personal loans, we get them in the mail. These are not retail installment contracts. These are personal loans. They can use the money for anything. So somebody could literally apply for financing through you if you're a roofer and air conditioning through your broker lending thing here. They can get the money and they can hire your buddy down the street that's going to come in $500 less. That's correct. It is not closed loop funding. They say they're no dealer fee, and when you read the fine print, some of their lenders charge up to 6% dealer fee. So read the fine print immediately. Read the fine print. The rates are typically high. What I've heard back from the marketplace, anywhere from 19.99 up to 38%. And that's for customers that actually have really good credit scores. And then they'll say that they buy down to 500. Can you imagine how much they would approve somebody and what the interest rate would be with somebody that actually has a 500 FICO? Low terms. Remember we discussed terms on the other slide? You want to make sure you're offering plenty of terms for your customers to make a buying decision. The longer the term, the lower the payment. Their terms are typically between 5 and 7 years, maybe even 3 years. Why? They're personal loans. They're not home improvement retail installment contracts attached to the actual UCC filing of the object that you're installing. They can go buy a Rolex with this money. They don't have to give it to you for the new air conditioner or the generator or the roof or the siding or the windows or the gutters or whatever you're doing. They can do whatever they want with the money. There's nothing making them use it with you. Approval rate's horrible. You've got no control at the point of sale. They get the money and they can spend it anywhere. And what do people do that get money up front? Well, they ask for cash discounts. The money doesn't go into your bank account. There's no closed loop funding. And there's no retail installment loan attached to this thing. It is a personal loan. The loans can come from banks like One Main Financial, SoFi, Lending Point, Lightstream. The list goes on and on. Yet these brokers will charge you up to $5,000 to join the program. When in essence, you literally, if you really wanted to offer your customers personal loans, which I would not advise you to, but if you had to, because you just got into business, this is the only thing you can do. You can send your customers and go grab a link directly to these people and circumvent this baloney. Because I'm sure somewhere in the process, they're making 500 to 600 basis points per loan. They're in business to make money, just like everybody else, and they have the right to do that. They have the right to make money if they're in business. However, how much money are they making on the loan for your customers to be staring down the barrel of a 19.99 to 38% interest rate if they deserve a 7.99 interest rate? Think about it. Why are the customers getting such high interest rates and low approvals and terms through these brokers? Why? Someone's making money on that deal for that to be no dealer fee. Someone's making money somewhere. How much money are they making is the real question. Well, I don't know. Test it. Go to your broker thing if you're using them. Put a loan through, see what the offers are, see what the rates are. And then, because it's soft credit pull, so it ain't going to hurt anybody. And then go directly to those lenders. Go directly to SoFi, Lightstream, like go there and see what the comparison is. I bet there's a 500 to 600 basis point spread. And guess where that money's going? To your broker that's touting no dealer fees. So the issue that I have with this and why I'm bringing this to light is this. If a contractor's first experience in this industry with lending is to go through one of these outfits and they have a horrible experience and their customers hate them and they give them a 1-star review and they can't fund anything and they paid a bunch of money for it and their experience was horrible, it's only going to poorly reflect back on us, real people that do real loans in this industry. And there's a whole bunch of us that, I compete with, but I also support. It gives it a black eye in the industry, because if this is your first experience and you think this is what home improvement lending is, and you don't know any different, that there's actually real lending out there that you didn't even get a chance to see, we have to undo all of this mess. That's why I made this video, because I need to educate people on what these brokers are doing to you and your customers. So what's the process if you want to get real lending? Reach out. We get you enrolled. We get your portal set up. We assign you your account managers that are professionals that have been in this industry. You get access to the training center. We do the go-to-market training strategies. You've got access to unsecured, secured payment processing, business loans, lines of credit, training for your team, your entire team. And then in essence, when you put all this together, you go out and sell more jobs. That's my pitch. Well, what's the process to get started with you, Chris? You hop on the phone with myself or one of my teammates. We make sure that the program is going to be right for you. If you're the right fit for it, if we're the right fit for you, you vet us, we vet you, and we decide if we want to work together. I've said no to plenty of people that don't match our core values. I don't want everybody to have this. I want to work with people that actually want to make financing a big part of their business and are committed to the process of getting trained and getting learned on how to go do this properly. But this is a systematic and programmatic process where we can take you from start to finish and help you close more jobs and bring your margins, your profitabilities up. So if you're interested, reach out. I'm sure there's a link here somewhere. If not, just head over to Improvifi.com and fill out a form and we'll set up a meeting and we'll go from there. But yeah, this broker lending, it's not good. Hopefully, this short video helped explain why it's not great. I'm sure there's tons of more reasonings on why not to use them and why to use real lending like us, but I just wanted to make a short video to explain it all. So yeah, if you're interested in getting hooked up and having a conversation so we can introduce the platforms that we have here to help you, reach out. We're here to help. Have a blessed day. We'll talk to y'all soon. Bye now.